Hello, Can family. How are you doing? I hope you enjoyed your weekend and are ready to start the last week of October with a lot of energy. Today, we are going to talk about our weekly routine on how we actually check the market and start our trading week. Before sending any new signals to our Telegram channel, we go through most of the coins in the market to understand how the overall price action is looking for the week ahead. We also check some indexes in order to understand how each index can affect the whole crypto market. All right, without further ado, let's check the Bitcoin CME chart. As you might know, CME is one of the biggest futures trading companies that provide liquidity and actually trade Bitcoin and Ethereum in the market. And as this company follows old forex system, they turn off their charts at the weekends and they do not trade. And because of this, the market movement that happens through the weekend creates some gaps between the closing of the price candle on the weekend, between the closing of the price candle just right before the weekend, and the opening of the price candle on Monday at the end of the weekend. And since CME has a lot of power in the market, they prefer to close these gaps before price moves any further because they don't want any uncalculated risk and positions on their books. And because of this reason, these CME gaps on the chart can give us some hint on where price might go next. So on Bitcoin CME futures chart, you can see that this weekend price was bullish, and as the CME chart opened, there has been a gap between $110,000 to $113,500. And right now you can see that the momentum is fading out, and there is a chance that price might come down and fill this gap before going up. Now, why are we saying this? Because if we go into the past behavior of the market, most of these gaps have been filled. And right now, there aren't any gaps that have been unfilled in the last few months. So we had a small gap here, which was filled. We had a gap here, which was filled. And then another gap filled. We had another gap here, filled. Another gap here, filled. Gap here, filled. Gap here, filled. You see, these gaps tend to be filled one way or another, sooner or later. And this gives us a hint for trading in the market. And these two gaps here are actually a nice support area for us to understand where price might come down next. But is it going to be right away? So are market makers going to just come down and fill the gap right at this hour? Well, that could be possible. Or they could play new games and create more FOMO and just drive the price a little bit higher and then go down. We don't know that. So in order to understand, we need to analyze price a little bit better. So let's go to our old chart on Bitcoin and see what we have on the table. For weeks, we have been following Bitcoin on this daily time frame. And as you can see, price has been going according to plan. Now, if we consider our pattern playing out and the big correction that we had as wave A, price right now is going through the recovery phase on wave B. And as you can see, it has already touched our first resistance area. And based on the reaction that we can see here, a correction might have already started. But are market makers going to make it so easy for us? We don't know that. We have to wait and see whether this candle is going to give us the rejection we want or not. Because there are two scenarios involved here. One is a rejection right from here, and two, going to higher levels and gathering some more liquidity before going down. Either way, at this point, we are not bullish on Bitcoin, and we are not going to buy or invest anything in Bitcoin until it comes to lower support levels. And our big goal to buy Bitcoin is below 100K level, between $96,000 to $88,000. Of course, there are many trading opportunities along the way that we publish on our Telegram channel in lower time frames. Now let's take a look at Ethereum chart and see what we can get from the CME gap there. Now Ethereum chart is a little bit uglier regarding filling the gaps because the influence on Bitcoin on the market is much heavier. But still, most of the gaps on Ethereum get filled as well. But I don't want to go deep into the details, and let's just take a look at the current price. Right now, you can see that there is another gap on Ethereum from around $3,944 to $4,080. And this gap is also where we can keep an eye for a pullback to happen. But again, are market makers going to fill this like this and go top? Or are they going to play here a little bit and then go down? Well, what we know is that because of this gap, we have to be careful with our positions and just keep it in mind as a reaction zone for the market. But to understand what's going to happen next, we have to also check our other analysis on Ethereum. Now, for weeks, we've been following this chart on Ethereum, and as you can see, on the daily time frame, we told you that price is playing at the distribution phase, and this Wyckoff analysis tells us that we need another liquidity grab as last point of supply before Ethereum goes down, because we already have our sign of weakness leg fulfilled with the recent crash, and now the last point of supply can give us the liquidity grab that we need on Ethereum before going down. Now, as you can see, this candle already seems bearish and it's losing momentum. But again, we told you that market makers may not easily forget about the liquidity around here and prefer to push the price up to take the liquidity above this one and gather enough short orders before allowing price to go to lower levels. For this reason, we are playing it safe. First of all, we are not making any buy positions on Ethereum at this point. We already made our buy positions around here and we are already 10%, 9% in profit. What we can do is to book partial profits like 50% around here and hope to get another push to unload our other 50% around here. But buying positions as investment plans is not very viable at this level. We have to wait for the market makers to play their games, and once price reaches a safer supply zone, then open up better short positions. I hope you enjoyed these two analyses and got a glimpse of how we check different charts in order to understand what's going on with the market makers' plans. In our next videos, we are going to talk about some indexes like USDT dominance, Bitcoin dominance, Ethereum to Bitcoin, total market cap, and other total indexes. I hope you enjoyed this analysis, and until our next update, stay safe and enjoy trading. Bye.